And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. And certainly we did have a very active end to this week, certainly today in particular on Friday. Let's take a look at some of the news that drove price action last week. And certainly front and center were trade war fears. And we did see a deal that was made with the EU, and that did ease investors' lack of confidence going into the beginning of the week. We also did see a certain group, semiconductors, initially gain on that EU deal because they are committing to purchasing a number of products in that space. And then also trade talks between the US and China. It did end in a truce, but again, it was better than any kind of trade war fears. So the markets were doing pretty well heading into that key economic data. And then as the week progressed, of course, on Thursday, we did get some key inflation data that the Federal Reserve looks at very closely, and it just came in a disappointing fashion. That was followed by today, Friday's employment data. And while the employment data came in below estimates, more impactful was the fact that they went back and revised prior months lower. And that had investors really on edge. We did see quite a sharp pullback. So we are going to take a look, unpack what took shape into the close for the week, and then how we can use historical precedent as our guide in helping make any needed decisions at this point in time. So let's go ahead and take a look at where we close for the week. And here we are with the daily price chart of the S&P 500. And you can see that going into the end of the week, we were still sitting up at close to new highs before yesterday's inflation data. And then, of course, today's employment numbers did push the S&P 500 below that 21-day simple moving average. Of note, we now have a negative RSI, and this is not particularly good news, but I will share with you precedent to take a look at what else you want to be on the lookout for. You can see that we have this negative MACD crossover, that black line down through the red. We've certainly seen that in the past without any big impact beyond that. But it is that RSI that we're going to want to pay attention to, because if we go back historically, and I'm not in any way suggesting this is going to take shape, but we certainly had that take place before the recent bear market. But we've also had other periods where that RSI has dipped below and been able to bounce. Likewise, if we go back to this July into August period, we're going to be taking a closer look at that. And this is taking us into last year. And we will look at some of the dynamics during that period as relevance now. There is an awful lot to say about the summer period and the summer months. If you go back historically and look at some of those periods where you have these sharp drops, oftentimes during the summer period, whether it's because traders are on vacation, there's not quite as much by way of volume, but net, there is a seasonality that's going to be there as well. So let's go ahead from here and take a look at the all-important Nasdaq Composite, of course, tech-heavy index here. And we can see we closed just in positive territory with that RSI. The Nasdaq also closed below that 21-day simple moving average. And then we did have that negative MACD crossover. However, it's not quite as ominous as that view of the S&P 500. Let's go ahead and take a look. I talked about using historical precedent as your guide, and we are taking a look at the Nasdaq Composite. And what I wanted to share with you is that period last year, that July into August period. A couple of characteristics that took place back at that time is the fact that we did get an RSI into negative territory. The Nasdaq did close below that 21-day simple moving average, and we had a more defined MACD negative crossover, and we did have a pretty good pullback here. This was a little more than a correction going back into August. Now from here, what I'm going to do is share with you how you can add an additional overlay on top. And what I'm going to do is add that volatility index behind the price. And let's take a look. As many of you may recall, this decline period back here in July of last year, there was volatility centered around the Japanese yen. There was a bit of a crisis trade relative to Japan's monetary policy, and that was certainly front and center. Also, interest rates were on the rise. But what I'm focusing on here is this spike that we saw in the volatility. And in turn, it did take shape about a week and a half into this pullback, and we did get that spike. So if we go ahead and take a look at some of these other periods where the markets faltered, this is December going into January. We were going into the inauguration of a new president and a new regime, a lot of uncertainty around that. And we also saw that RSI dipping in and out of negative territory on the RSI. So again, using this historical period, you will want to keep your eye on this volatility. Now, this is that peak period of the bear market in recently that took place going into April. And what I wanted to share with you here is this pretty big spike that we got today. So we're sitting here at 20 with that volatility index, and this is after volatility had gotten down to about that 15 level. And I may have mentioned this, but it's certainly something I talked about, is that when that volatility is sitting down here at these lower levels, at some point in time, inevitably, you will get that type of spike because it also correlates with an overbought RSI. There's that RSI up above 70. Now, at this point in time, we did also have an overbought RSI, but it was not as severe as last year. And then also we did get that big spike. So in essence, keep a very close eye on this volatility index. It is all about fear. That's what it is telling you. And at this point in time, we're sitting here at 20. Anything above 18 is viewed as elevated. So ideally, we don't want to see that type of spike, but as history tells us, we can get into an oversold with that RSI, and then the markets do tend to recalibrate. So let's go ahead and drill down beyond that. Take a look at these sectors in the S&P 500, these 11 sectors, a 2-month daily price chart view, and then it is sorted by relative strength in descending order. So up here at the forefront, you have your generally stronger sectors being displayed. And then down in the lower right, you have your weaker areas. So XLU, this was the only sector that ended in the green. And you can see this nice gap up very, very close to a base breakout. Nice high volume on that buying. And we will get into what is shaping up here. I touched on it a little bit last week's show, but we will get more into what is helping those utility stocks. What I wanted to share with you beyond the utility is to make sure you're aware of some of these areas that got hit a little bit harder, certainly today. XLY is consumer discretionary, and that group was down almost 2.5%, all about the employment numbers coming in really weak. And of course, that points to the potential of consumer spending deteriorating a bit. We will look at one area in that sector that fared better than others. Also, we want to take a look at financials because in response, we did see interest rates fall. So here we are with XLF, and in that declining interest rate environment, oftentimes you will see bank stocks. They tend to fare a little better in a higher interest rate environment simply because their profit margins on lending activity will improve. So let's take a look at some of these other areas that are moving in response to the news today relative to those employment numbers. And we're looking at XLK, and you can see the RSI still up here in positive territory. And Looks to me that we did close just above that 21-day simple moving average, actually 2 points below. So we were very close to potentially recovering that, and that would be certainly good news. But net, I would argue that technology is holding in fairly well. Another area that we need to take a look at, because it's been a real leadership area, is the industrial sector, XLI. We had a couple of surprising earnings results coming through here. We do now have a negative RSI, but at this point in time, I personally would need to see more information before making any really big shifts to my portfolio. Let's take a look beyond those 11 sectors. And as many of you know, I have ETFs that I use that are really quite powerful as far as staying on top of these markets. And again, it's that 2-month daily price chart view. And what we can look at here, this is that volatility index. We already did take a look at it with that line chart, but with this view, you can see that you can also utilize the key moving averages, RSI and MACD. Those indicators are all still very relevant when looking at that volatility index. So at this point in time, we've moved up above what would be resistance, that 200-day simple moving average. And again, you can go back historically and see what that could lead to. We had a little bit of volatility in June, but it did not get elevated. And then we also have that RSI in positive territory here. And the MACD had a positive crossover. We're not quite in positive territory yet, but of note is the fact that looking at that volatility, that fear did spike. So we will be keeping a very close eye on that. Two areas that did relatively well, but they are not exactly exciting. First up here is XHB, and this is all about the drop in interest rates. And of course, home building stocks are going to benefit from reduced mortgage rates, but it was a tepid move at best, and we're not in an uptrend by any means. We also did see a flight to quality with gold, and it was up a couple percent. We're back above that 50-day, but again, nothing overly exciting for me. But what I did want to drill down and look at here is semiconductor stocks. And the reason is because semiconductors very much have been clear-cut leadership industry group going into this week. And here we are with a decline with the group now back below that 21-day simple moving average, but it actually got down to this 50-day. So we're going to keep a close eye on that because we got pretty big volume on that selling. And then also we now have a negative RSI. And the reason for this is you want to pay attention to the price action in leadership groups. Oftentimes before we get into serious trouble, those leadership groups, once they deteriorate, you will see spreading beyond that. Certainly not here to spread fear. It's more to give you a sense of what you will want to focus on going into next week. And again, being really aware of those leadership areas and how they're performing is going to be critical. Now, as we move through, there are many ways that we can really drill down further as far as what really took place today in particular, because the markets have been really faring quite well. We did, in fact, get into this overbought area with the S&P. Everything was sitting up here quite nicely. So let's go ahead and take a look at the underlying members of the S&P 500. And this is a view that you can capture very easily with Stockcharts.com. And of essence, I wanted to share with you the names going back over this 5-day period, taking a look at activity that took place this past week. And I wanted to highlight some action and some areas that are holding in really well. And hopefully you can see what I am seeing. First up here is Teradyne TER. It did pull back 3% today, but over the week, it was up 15%. We can also take a look. eBay really was flat on the day and had a terrific 5-day performance despite market weakness going into the end of the week. Western Digital is another example, as is MPWR. Cadence is another one. So what I am highlighting here is the fact that these names that were able to retain gains into the close for the week are all about AI and, in particular, power, the need for electricity, the need for power. Every one of these companies that I have outside of eBay, of course, that I've been highlighting are involved in that activity. NRG, another prime example here. And in essence, CEG is another one. AWK, well, that's a water utility, but we will get into some of those other utility stocks that are faring well. But we can see that the AI move in pointing out some of these names that are involved, in particular, moving into that second stage of AI growth, where the enablers, the semiconductors, have had a very extensive move, but this newer area where we need the electricity for those data centers remains alive and well. One other area that has been really outperforming, I've talked about this in the past, and that is these ARK funds. And these companies that are in these ARK funds are very, very innovative. They are at the forefront, either in AI, robotics, any number of areas, fintech, and so on. So relative to the broader markets, again, this, I hate to call them a leadership area, but certainly they have far outpaced the broader markets. We're looking at space exploration, ARKX, and you can see we are on the cusp of a potential negative RSI. And then we can go back to that bear market period and use that as precedents. We're seeing pretty big volume. This particular ETF was down about 2% on heavy volume today. So another metric by way of informing investors as far as where the sentiment lies. Here we are with ARKQ. This is technology and robotics, down about 2.5% today, heavy volume. So a couple of areas that you will want to monitor, and primarily it is going to be those stronger areas to determine where we stand as far as investor sentiment. Is that move into those innovative areas over the near term potentially behind us? Here we are with Teradyne. I talked about this particular company when viewing those S&P 500 names for last week. And let's take a look. They came out with earnings this week. And in response to those earnings, the stock gapped up above that 200-day simple moving average. Let's take a look at that high volume bar, relatively well above what we've seen historically with this volume. We can also see that we had a nice move in that RSI into positive territory. However, we did get into an overbought position on that significant gap up. More importantly for me is the fact that subsequently, over the following 2 days, we did see overall deterioration in some of these names. However, TER is still at this time above its 200-day simple moving average. We had that nice MACD bullish crossover. And as indicated, this particular company is involved in AI chip testing equipment. So that move into AI still has pockets of strength. However, as we all know, one day does not a market make. Let's go ahead and move over. I also wanted to share with you a view of Amazon because the stock had been in a very clear-cut uptrend. This is a name from my MEM Edge report. We had been generally trending higher over the last 6 weeks, but on today's earnings release, you can see that this stock closed below that 50-day simple moving average. If we take a look at that volume, it is on above average volume, the selling, and then also we do now have a negative RSI. So you will want to keep an eye on that. Now, I will say Amazon, if we take a look at those other M7 stocks, and the purpose is to share with you that this particular group has its leaderships and non-leadership names going into earnings. We've seen 4 key names report over the last 2 weeks. So here we are with that 2-month daily price chart view of the M7 names sorted by RSI, and take a look, because I just shared with you Amazon. We'll also take a quick look at Apple. And when looking at names such as Microsoft, we can see that the stock had a very bullish, and rightfully so, response to their earnings. And you can see also that the stock was down less than its peers today. Now, from here, what you can easily do is go ahead and take a look at an intraday chart. And this is something I've shared with you in the past. Here's that gap up on earnings and the stock buyers coming into the close. Now, while we're looking at this particular view, let's go ahead and take a look at how Amazon performed going into today's close. The buying not quite as advanced and quite as compelling, but we certainly are very oversold. Moving through, looking at some of these other M7 names, I did want to share with you this view of Apple, which had been a laggard going into earnings. And you can see this significant decline, heavy volume, and a now very pronounced negative RSI, MACD poised to turn negative as well. So when looking at these potential leadership names, you want to be aware of where that leadership is remaining. And here we are with Meta. They also came out with numbers. Take a look at that gap up in response, and then you can see buyers came in today on that dip. We do still have that bullish MACD crossover. So at this point in time, Meta and Microsoft, and of course, NVIDIA moving into the close. I'm going to go ahead and pull up an intraday here. It's not going to be potentially quite as inviting, but you can see certainly into today's decline, buyers coming in, and then the selling pressures into the close were just a bit too much. But at this time, we do still have Microsoft, NVIDIA, and Meta sitting up here in a leadership position, as well as Alphabet. Alphabet did close in the lower portion of its trading range for the day, and we are poised for that negative MACD crossover. But more important in looking at this view is the fact that Amazon and Apple are sitting down here. And then also Netflix, of course, was really priced for perfection up here. They came out with good numbers. Analysts were mentioning that they felt their growth was behind them. So this is where the ability to read charts is going to make the difference for you. Netflix was a name that I had on my MEM Edge report for quite some time, but upon this close below that 50-day simple moving average on heavy volume with a negative RSI, I did remove it from that near-term buy list, and you can see that it's sitting there continuing to deteriorate. Now, from here, we can take another look at this view of the S&P 500, because there was another phenom that took place last week. And at first, we did take a look at the 5-day performance to the plus side. Let's take a look at these weaker names over last week. And what I wanted to point out is the fact that stocks that were down the most today were already exhibiting weakness. So I found that really quite interesting, in the sense that CE, any number of these names that were down double digits or certainly close to that today, had already been exhibiting weakness going into today's market. And the reason I find that interesting, the fact that these weaker names got even more weak, is the fact that we have a clear-cut leadership area that is still holding in. So here's that example. Ingersoll Rand, RIR, here's that gap down today, but the stock already had been weak. It was not participating in the current bull market. It was sitting there, and that is going to be the case for any number of these names that you can take a look at that were down a lot more than the markets today. They already were exhibiting weakness, and that's very different from taking a look at the names that going into this week were those top performers. And here are names I will share with you. Western Digital, gapping up on earnings and down, but certainly relative to that sharp gain, not a lot of volume. So I'm looking at that as encouraging relative to that move. We already did take a look at Teradyne, and I also wanted to share with you a view of Cadence Design. This is another company that came in very AI related, gapped up. Now, what you want to pay attention to from here, and we will segue into this, when you have this gap up in earnings, ideally you want that gap to hold. In essence, you don't want the stock to close below this low. It's not a clear sell signal, but it's certainly not constructive. So you can see that we did dip below with CDNS. We dipped below that gap up, but buyers did come in on that dip. So these are these nuances that can be really quite powerful. MPWR, monolithic power, came out with numbers today and it was up 10.5%. You wouldn't think anything was wrong with the markets. You can see this gap up into a base breakout above average volume. Of note, for those of you not familiar, monolithic power is a semiconductor stock, and they specialize, their semiconductor chips specialize in power management. So this is what I was mentioning earlier as far as the power management space still exhibiting strength. So from here, we are going to segue into XLU and take a look at this chart. You can see I did talk about this earlier. Sitting up here, the group was up about 1.5%. A number of companies in here did report earnings last week. So let's go ahead and take a look at a couple of those names. Here we are with Dominion Energy. D is the ticker symbol. The company is renowned for being a leader in alternative energy, but more importantly is this gap up on heavy volume. And another couple of names here that we can take a look at as stocks that are sitting up here quite nicely. This, of course, is Constellation Energy, CEG. Let's take a look at AEP. This company also reported earnings this week. And again, this gap up, and looking at today's price action, it closed in the green, up almost 0.5%. So again, energy as a theme among AI is still obviously alive and well. Here we are with Vista Energy, VST. And then last up, we can actually, I'll share with you a couple more names. Here we are with Bloom Energy. The company had this gap up on earnings, another alt energy name in the AI space. And then we can take a look at GE Verona, and that is an alt energy spinoff from GE, sitting up here really quite nicely. And I did do an AI related webinar last week. Hopefully many of you may have seen that, and it was talking about the stages of growth that have been taking place and are expected to take place going forward for AI. It's a proven growth area, and so you can see these energy names still sitting up here quite nicely. Talking about the gap down, and we can take a look at a couple of names that reported earlier, and just as something to use as precedent, here we are with Gap, and the stock was pretty much priced for perfection sitting up here. They came out with numbers. Take a look at that gap down. So what I wanted to share with you from here is views as far as what can take shape beyond that gap down. If you own stocks that were down big this week, you will want to have something of a game plan. So with Gap, you can see that move here, push that RSI into negative territory, and then subsequent moves pushed it below that 50. So for me, I wouldn't need to see anything else. I would statistically, based on studies, that would be a sell point right there. There's that super high volume. And then, of course, we had that negative MACD crossover, black line down through the red. Another company that came out with earnings, we can take a look here, is ODFL. And this is more in line with the fact that transports are suffering, not what you want to see in a period where the economy was seemingly expanding. But you can see this gap down, and then the subsequent move below that 50-day negative RSI, and oftentimes drilling down to that intraday chart can be helpful. You can see these rally attempts are faltering. This is a 15-minute price chart of ODFL, which precedes further downside. So of note, again, when we get that gap down, you will want to note if it closes below that 50-day and you see that RSI turn negative. Certainly for investors that are more near term, that would be a sell signal. And then last up, we'll take a look at gap on a longer term weekly chart. And what you will see once, for my work, once that RSI turns negative on that weekly chart, it is going to precede further weakness of a longer term nature. And then also we did have that negative MACD shaping up. And that is it for this week. If you haven't already, go ahead and hit that like button if you like what you've seen. Also, I do have a link below to trial my twice weekly MEM Edge report. I dive in quite a bit further, as if you can imagine, as it relates to the broader markets, and then names on that suggested holdings list that did get hit toward the end of this week. Everyone have a fantastic weekend. Look forward to seeing you here next Friday.